Welcome to the Capital Spreads weekly update. Today is Monday the 3rd of September 2012, and as we start this month of September we look back historically as to what sort of month it usually is, and really it tends to be quite a negative month, or at least it has been in the past. The FTSE really on the whole tending to see a bit of volatility and often falling throughout the month. So really investors sort of seem to be a little bit apprehensive around the autumn time. Of course hasn't really got underway yet, but there is a little bit of tentativeness. However, that hasn't stopped the day getting off to a very good start. The FTSE is actually quite a bit higher this morning, and it seems to have found a bit of support around the 5700 level. That's in the face of some relatively disappointing Chinese manufacturing data earlier overnight. So really the expectation would have been to have seen European equities to commence the day on a negative footing, but that hasn't materialised at all. The expectations for investors ahead of key central bank meetings this week, in particular the ECB, which we'll talk about in a second, they really do believe that the ECB is going to do something relatively significant to bring down the peripheral bond yields for the likes of Spain and Italy in order to try and prevent the European sovereign debt crisis from escalating. So there's a little bit of expectation there, and a few buyers creeping in this morning. So the FTSE is at 5740, the Dow at 13090. Euro not really rallying too much, but it's at 125.70. Cable 158.80. Gold on Friday had a real spike to the upside as the Federal Reserve Chairman Ben Bernanke didn't really change his rhetoric at all, but certainly left the door wide open for more asset purchases by the Federal Reserve. So that gave gold a big boost. It's at 1688 this morning. Brent also has been supported, so crude prices are a little bit higher in the last few days. Brent's at 114.60. So really as a follow-on from Jackson Hole, where Ben Bernanke didn't really show his card of his deck of cards at all. He kept his hand very close to his chest, but he certainly really is remaining consistent, and expectations are that he will have to do something soon to prevent growth in the world's biggest economy from faltering. But today we've seen a raft of manufacturing numbers from Europe. They haven't really disappointed too much, a few below expectations, but the real surprise really has come from the UK, where manufacturing much better than expected. That's given a little boost to sterling today, but things will probably be quite quiet for the rest of the day because the US is on holiday for their Labour Day. Then tomorrow we get a interest rate decision from the Australian Central Bank. That's expected to remain at 3.5%. We get the PMI numbers for UK construction, and then in the afternoon we get US manufacturing data as well. On Wednesday the PMI numbers continue. It's the services side of things this time. Europe, we get lots of services data from there. The UK also the services number, and here we're expected to see the figure remain in the expansion territory above 50. So that follows, obviously, recently the services data has fallen to its lowest level since December 2010, so quite a significant fall for services, but they're still expected to remain in expansion mode. What will be interesting is to see whether that figure can be any better than expected, and see whether the Olympics has contributed to services activity in any shape or form. Then on Thursday, really we haven't touched on corporate data, but the only real big company reporting this week is Morrisons, so they report on Thursday. From an economic data point of view, we get obviously these central bank meetings. So it's the Bank of England and then the ECB. The ECB really will be the focus of the week. So the market really is expecting them to reduce the base rate there from 0.75% to 0.5%, but the focus is going to be on their asset purchases. What are they going to do? Just what assets are they going to purchase, and is it going to be unlimited? So lots to get our teeth into, and of course markets just heading higher at the moment in the build-up to that meeting on Thursday. But before then, there's a Spanish bond auction which also will be in focus as well. Then in the afternoon from the US, we get US ADP private payrolls a day later than normal because of today's holiday there, and also the non-manufacturing PMI number as well. Then on Friday we end the week with a climax of the non-farm payrolls. As always, does provide a little bit of volatility for the markets. The number there is expected to dip a little. Markets expecting 120,000 new jobs. That's down from the previous month of 163. But before then, we do get industrial numbers, industrial and manufacturing data from the UK. So a big week for economic data, big week for central banks, and it could get quite exciting. That's it. As ever, do give us feedback, media@capitalspreads.com.